Hey, it's Derek Gillette here with the kind of summer holiday wrap up and focusing on fall. And of course, fall is a short window for real estate when things can be quite active, where we're going to see a lot of buyers and well priced listings meet. And, we'll probably see some multiple offers in that, average home price range as well. What I'm going to do is I'm going to actually first take the big picture of Canada, then I'm going to zoom into the island and then down into a macro view of Nanaimo so we can get a really good cross section of what's going on. I'm not going to focus just on Nanaimo because, of course, there's a bigger impact at play here as well. So national overview, obviously the things that we have to look at is number one, just came out, depending if I might get my video out today or if I get it out on Monday. There were 65,000 jobs that were lost. Unemployment rate rose to 7.1%, a little bit higher than what the experts anticipated. And of course, we're seeing obviously unemployment in Toronto, I believe around 9%. And, the big one that I thought was youth unemployment. That's hitting at 14 to 15%. So that's something we definitely have to pay attention to, obviously, with our market. And of course, that might actually impact, further rate cuts as we move into the fall and into next year. The other thing that we have to watch as well is the GDP. So the GDP annualized, I think, dropped around 1.6, just under 2%. Where was that? That was obviously in exports and business investment were the drags. Obviously, people aren't investing in their businesses, obviously due to understanding of tariffs and where that was going to sit. So that might actually bounce back the next quarter when we see the next numbers coming out. Households did still spend money, but obviously not enough to offset the trade headwinds that we've been seeing. Trying to figure out rates and where they're going to go. Obviously, we've got to look at the 5-year Government of Canada yield. And basically, that's hovering around the high twos. That's keeping most fixed rates steady to slightly easier. And in fall, we may see a slight adjustment. So that's something else, again, that I just mentioned may bring more buyers into the market because, again, that's very price sensitive on the affordability aspect. So looking at Canada Real Estate Association read sales actually up 6.6 year over year. The national average price is still flat. And so, again, we're still at a balance with more choices than a year ago for buyers. So that's pretty good. That's not what we're seeing here in Nanaimo, as you'll see in a second, that our inventory is decreasing. When people start talking about a market in general and we look at Vancouver, the reason why Vancouver is having a tougher time, obviously because of pricing. So in Vancouver, they're seeing a negative 3% inactivity, where we've had a plus 6% inactivity. The inventory, as well, for example, is up 17% versus only up 2% for us. So again, a massive difference in the amount of inventory that's coming on the market there and our sales versus their sales. And then you look at areas like Quebec, which is actually doing quite well. All comes back to affordability. When you can go in and move into areas where pricing wise, a bump in interest rates up or down is not going to impact you, but definitely in Vancouver and Toronto, it will. And again, when we talk about Toronto, that's ground zero. We've got 9% unemployment there and, months, I'm talking 50 months of inventory for some of the unsold condos that are coming onto the market. Something we're not even, experiencing at all because of our affordability. So let's look at Vancouver Island. Sales and supply in August on the island. We always have a slower August. Vancouver Island is a kind of a vacation destination. So lots of traffic, lots of people coming over, checking out the beautiful island, hiking, the West Coast trails, all of those things. So we've saw a lot of activity visitor-wise. We still had around 690 sales. I think that's up 6% year over year, as I mentioned earlier. Active listings down 3% year over year. So when you start seeing that, you're going to start seeing our months of inventory starting to decline. I think at Vancouver Island, we're around 6%. 6 months of inventory. And Nanaimo, I think we're probably around 5 months of inventory. Single family sales up 3% year over year. Condos up 9% year over year. Townhouses up 4% year over year. So board wide, the average price, benchmark price, is 796,900. So just under 800,000. Up around 2%, I think, from last time. And the condos up around 1%. Townhouses sitting around 546,000. and that's also up 1%. So just to kind of give you an idea there. So again, everything's fairly stable and steady here in the Vancouver Island area. Nanaimo, street level, looking at where we're at, we've got basically benchmark price at around 820,000. That's slightly up year over year. And again, still we are supporting a buyer's market. They're still value hungry. As I've said to all my clients, turnkey and correctly priced obviously wins, moves homes off the market. I want to continue to think that we're in a balanced market with inventory starting to decline. Anything anchored to spring pricing is getting shopped and skipped. So you've got to be price sensitive and make sure that your agent goes through the home with you and you dial in all those things and you get the proper marketing. Can have a massive impact on whether you sit on the market or you sell. And that just adds a lot of stress that you don't need. Condos are obviously the quiet outperformer, lower payments, and we're seeing a lot of people move into those as well. So my playbook, first, sellers, refresh, relaunch, price based on the last 30 days, and you will move your property. Don't have to get aggressive on pricing, just dial a few things in. Buyers, line up, get a 90 to 120 day rate hold. Let's target some price improve relists, stuff that's nailed down as far as quality. And there's lots of those on the market right now. Investors, we're starting to see some pretty good values on what you can get for rents on some of the condos. You go buy a condo down in the Harborview district, brand new, ocean view, 400 and something thousand, and still get good rent out of that. So there are some excellent opportunities in the market. And I've always said, in markets when they're slightly balanced or a little bit slower, you're going to look back in 6 months from now and say, oh, remember when? And you see the market start to change. You can hear all the doom and gloom you want from Vancouver and Toronto. We're not experiencing that here. So again, bottom line, Canada's economy is soft. Rates are stable. Island market is definitely balanced. Our fall window is short. So if you want a price audit or a short list for buyers on home that are improved and look like good value, send me a message. And I think it's important. Let's make this next 7 weeks count. Thanks again for watching.